In this video, I'm gonna, this is January 11th after CPI, but I wanna go over the ribbon, the SATI pivot ribbon. I'm still really like testing and learning and understanding. It's really good on trend days to know when something's supposed to flip, and then just sort of holding for the bigger picture. You don't necessarily thicker the ribbon, bigger the trend. So you'll notice like the end of the day, you see how the ribbon flipped here, and then it just was thinning out, and then they came back above. So that's why you have to be super careful. But like on big volatile days when the ribbon is very big, usually I've noticed you'll have a pullback into the ribbon for the first push, and then it continues. When you get into a second test into the ribbon, it's probably going to exhaust. So let's go over the what this ribbon really does and helps you. So you have this, it's called the 42 EMA, and what's really nice about this is if it coincides with VWAP, then you'll know that it's strong. You use it as a wall. So here after CPI, you can see that we broke hard underneath the EMA and VWAP, and see you use the levels. So when it came and it just cracked all the way down, you know, a lot of times I don't like trading with the ribbon until later on, when data is collected more throughout the morning. This is just me personally, but you can see that right here. Actually, you'll be able to see. Let's switch to a 1 minute. So you can see on a 5 minute, it's pretty clean where it comes down, comes into a ribbon. The ribbon and EMAs are always lagging indicators, but when you can see what's happening on a bigger time frame, it does help, like especially right here, and we'll go into that. So right here, it pulls into it, and it actually comes and taps this EMA right here. So if we look at the 1 minute, you can see that it came right into that EMA and into VWAP, and then they rejected it hard, and then it came back below into this ribbon, and so that's why you can sort of see that. Oh, by the way, the ribbon, if you download it, my settings are time warp 3 minutes. That purple one is a 48 EMA. Nothing else really matters. I mean, yes, you see others, these red and orange, and you know, this is the bullish slow cloud, bearish slow cloud. So you see how it goes right up into this cloud, the red, and here this goes right into the orange. When it goes into the orange, it's starting to lose that momentum, possibly. It also coincides with the level. It all depends on your level. So you can see that it came back down, and then it just was following this ribbon. So any kind of push up, it's pushing up into this ribbon, you know, and see it's falling, you know, and then, but again, it's lagging. It's a lagging indicator. It works really well when you have consolidation. When you have consolidation, and you won't know that until you know, you start getting some chop, right? So if you start getting some chop, you'll know that they're possibly, this ribbon's going to catch up, and it possibly can cross back over. So let's go back to a 5 minute. And again, you're going to have to play around with this, but you can see clearly in this day that this was a trend. And so you had this consolidation between the fib and this level, and then eventually it broke out at 1140. It came above the EMA, and then ideally I was hoping for some kind of retest, but you know, now you need to use this EMA as support. That's what's great about that EMA, is you can always use it as support or resistance. And so it came back into it on top of the fib, and then just kept on going, and it just was falling. It just was cruising along, and then it wasn't until it dropped down in. It dropped from here down to here, and then they recovered it. Same thing, dropped down to here, and then they recovered it. So that's what's great about the EMA, as in you can use it as a support and resistance. I also like using it on a bigger time frame. So on this one, I have the settings a 30-minute time warp. So the reason why is I'm using 30-minute candles, but you can see how this is nice, where when it drops and the ribbon catches up. A lot of times it takes a while, it takes a day or so to catch up, and then you can see you can use these lines and these the colors as a way to gauge what it's doing. And you see how when we pulled up on a 30 minutes, we squeezed up, well, you're still in this downtrend. So you have to be short biased. And if you would have right here, then you would have caught the move back down here. Same thing here. It shot up and stopped right here and then reversed, came back down. It's the same thing on the upside. You see how right here it gapped down into the pivot? Until you clear this back down this EMA, you have to be scooping. And if you did, you would have been going up and then up and up and up. And then finally, usually what ends up happening when there's a flip is you find a base. It's the same thing, on a daily, right? Intraday. You see how you find a base, it consolidates, and then it breaks, and then it reverses the trend. Same thing on a multi-day. On a multi-day, you had 2 days where it found a base, and then they gapped it up, and then they shot it up above the EMA, and they held that. So it usually takes some kind of consolidation day, and then some kind of volatility day, the third or fourth day, in order to break the trend. And so today you had like a double, say double top, but you had resistance and you had news, so it was going to create volatility, and you were breaking it. But I per se wasn't convinced, because we had to hold below this in the afternoon and then continue down, but because we broke back above, now it's a reverse. So now what this play is considered is they call it a VOMI. It's a weird name, the creators of the SATI of the pivots, is when this starts to look like a dolphin that's going to throw up. Basically, when you have these confluences like this, where these ribbons is crossing back above and back below, you start having this basically consolidation pattern. When you break in any direction, like if this trend was strong, it's gonna like come back down and then continue the trend up. But if it comes back down below this EMA, then you need to use that as resistance, and it might be strong, and then it's gonna loop around and turn back around. So again, it's only good when there's a clear defined trend and you use that, and usually it helps you for a couple days or even a longer period than that. I mean, look at this. You had an entire week that just grinded and held this ribbon, and then came right into here, shot back up, and then it finally dipped into the this blue area. It still never got to the EMA, but look, you had a support, you had some kind of a level, and they shot it back up. So that's what's great about using, but here you can see that they actually dropped it very fast below. This probably was Fed speaking, and then they shot it back up. But look, if they didn't start dropping this, if this at any time recovers, you see that this EMA is caught up, and so what it ended up doing is come back down, shot it back up, and then now it's a little bit weaker than it was before. So it wasn't until you saw that it was the last day of the year, they dropped it below and they could not recover above that EMA, and then the first of the year they dropped it, came all the way down. Then the second week of the year they scooped it all back up. So anyways, that's how you play the ribbon. I'm debating whether I should really use that in my plan. At the end of the day, the pivots are the most critical things to use, right? Because those are stagnant. Those are predefined fib levels, and they don't move. Versus these EMAs, they could be moving. They can also psych you out. All it does is it allows you to figure out the sentiment of the trend. So like in this case, if you ended up, hold on. Sorry about that. I don't know what's going on here. Oh. Anyways, I guess it's just a measurement tool. I think I have something not right, but here we go. If you use that, you could have stayed in the trend, right? As in honesty, this right here was just a pullback, just like this. As in, this would have been your short, right? And this should have right here, this 5-minute candle should have kept on going and should have blown through and then found support right here. But the mere fact that it came down, it was a lower high, and then they shot it back above. This right here is when you start recognizing that this is a trend flip. You have a level and you have the ribbon, and this right here is super powerful because if you can play this, you can at least get 50 to probably 150 points. This is 100, 150 points move out of this flip, especially when it's volatile. So anyways, that is how you play the ribbon. Again, I'll show you a 1 minute. 1 minute sometimes can be really helpful too, because a lot of times the ribbon wants to catch up. Like look at yesterday. Yesterday it came down, came back above VWAP. You use VWAP as support, and then you see how it was just holding this EMA. You know, you had this massive move up, but look, it was moving way out of the ribbon. So this was out of norm for the trend. So what do? They ended up dropping it back down. But look, you have the EMA and you have a pivot as support. So it just like anything, you have to trust in it until it's proven otherwise. And if this would have dropped below and then consolidated, then possibly they could have kept on going lower. But until then, it's just a scoop, even though it freaks you out because this is a major move. But look, it ended up just kept on following the ribbon. But look, anytime it goes too fast for the ribbon, it has to catch up. So catching up is consolidation, and then drops back into it, and then reverses. Here's a fib, and then comes back above. And then it wasn't until you start getting some momentum, you know, where you start crossing these pivots. But these are things you need to plan for ahead of time, as in, you know, the fake breakout reversal kind of plays, and then also these ribbons. So anyways, that is a lesson on the ribbon.